back to your second question about PEs, Tesla's trading at about 58 times my next year's estimate. People say that's expensive, but you can't, if you study finance, you know that you have to look at what is that relative to the growth rate? Because the growth rate, if it's flat, like on a GM or a Ford, 58 times would be absurd. But if you're growing your volumes and your earnings at 25 on volumes and 35 at earnings, that's not really that expensive. So you look at something like Apple. Apple trades at about 30 times earnings today, but it's only growing at about 10% a year. So on a price earnings relative to growth basis, that's about 3 times. Tesla is trading at 58 times earnings, but it's growing its earnings at about 35% a year. So it's trading at a peg of about 1.8. So that's pretty cheap relative to other, we'll call it mega caps. Relative to NASDAQ, NASDAQ's trading at an overall peg of about 2. So I would argue that as long as Tesla can sustain its growth rate at 35%, it still looks pretty cheap. The reason it's growing so fast, though, is because EV adoption is soaring. If you look at Norway, you look at the Netherlands, you look at even China, you could see EV adoption going through the roof. It's not so much true in the US yet, but if EV adoption today, which is about 12, can get to 60 by 2030, which is our projection, that's about 24% tailwind growth just for the whole category. And in our view is that Tesla could gain share within the EV category because of its innovation. So because of Cybertruck, because of the $25,000 vehicle, and maybe you'll get some positive because of FSD, although we're not counting on that. That's the full self-driving.
You see, that's what the beauty about investing in Tesla stock to me is that even the financial analysts like Gary, who don't include Optimus, they don't include FSD, they see 35% growth just from hardware sales, and they still conclude that Tesla stock is cheap. That's why it feels like there's a certain margin of safety, because if Optimus does happen, if FSD does happen, it's just like this tremendous bonus. I mean, we just saw Tesla's second generation robot, a pretty fascinating video, and for some reason, none of the media outlets covered it, not even one. Why is nobody talking about it? Institutions' refusal to believe in what Elon is saying and what Tesla is doing is creating a massive opportunity for guys like you and me, for girls like you and me. But look, we have guys like Gary who are more traditional conservative. They've got clients to appease who are going to pinpoint the obvious for us. EV adoption is soaring, and Tesla has insurmountable leads in these areas, in these categories that are soaring, not only automotive, but also energy. So look, 35% growth. He sees Tesla going to $300 in the next 6 to 12 months. So I see that as a margin of safety. I can get behind that, but I also get the bonus of FSD and robotics. Now, before I get repetitive, here's Gary on why hardware sales are so secure.
Well, Cybertruck is huge. Last time we saw this level of innovation is when they launched Model Y, and it created a halo effect for the whole Tesla franchise. You saw volumes explode in 2021 after Model Y came out. It went up 87% after being up, I think it was like 37 in the prior year. You're going to see a similar halo effect this time. People are lining up to go into the stores. They can't get a Cybertruck unless you ordered it 4 years ago. But what's happening is people go in, they learn about Tesla, and they buy a Model 3 or they Model Y. And I think that's probably the most important factor. You mentioned price cuts. Tesla took prices down earlier in the year. They didn't really get much out of it. I'd say it stopped the bleeding. I don't really think it was that smart of a move to do it. But on the other hand, their volumes for the year are going to come in at about 1.8, which is about 40% above where they were a year ago. And I think one of the things investors like me are looking for is, have the price cuts stopped? Will you see gross margins bottom either in third quarter or fourth quarter? And I think they have. So that's the second big story. The third big story is going to happen in a couple of weeks. You're going to see the $7,500 EV credit, which up to this point, you get to take it as a tax credit. It's going to go off invoice. And so immediately the prices of all Model Ys are going to effectively go down by 7,500. The Model 3 Performance will go down by the same amount. The Model X Long Range will go down by the same amount. And that's going to be a catalyst for the entire EV industry. So those are three big things that are happening.
Well, the data shows that EVs are already competing with ICE vehicles in the US on total cost of ownership. And that's crazy because the majority of people still believe that EVs are wildly expensive. As Tesla continues to ramp 4680 and integrate Optimus into production, and the price of materials continues to fall, EVs are going to get cheaper and cheaper. Like, let's assume that Tesla only sells 10 million vehicles in 2030, half of their internal goal of 20 million cars by 2030. And let's assume an average selling price of $30,000. That's $300 billion in revenue just right there. Now, let's take their operating margin from Q3 at 11%. That's $33 billion in profit. And by that time, Tesla's energy business might just be around the same in terms of profit. I mean, look at this. You can see the data. Energy storage is expected to grow by 14 times by 2030. And Tesla's margins in that department are greater than the automotive. They are currently 18% in their energy storage solutions. So this is why Tesla feels so safe to me. They're dominating the hardware business. Nobody's accounting for the software business. It's just going to be icing on the cake.
Hey, Gary, Prost here. So talking about those price cuts, there was a lot of hand-wringing about margin dip and when are we going to see that trough for margins based on the fact that they're cutting prices to move volume. It sounds like you're saying that it wasn't that much, it wasn't a big player in terms of volume, but are you concerned about that margin story at all?
Well, it's hit, right? So look, Tesla's up 104% year to date. But fourth quarter of last year, you could see this coming because they started cutting prices in China. People started expecting the price cuts in the fourth quarter. So last year, if you look at fourth quarter of 2022, Tesla was down about 60%, NASDAQ was flat. So the market anticipated the price cuts, seeing that they were happening already in China. So margins have dropped, as you say, Prost, from 26% to about 16. I think they've bottomed. And as an investor, you're looking for, what's going to happen going forward. And I think you're going to start seeing margins creep back up. The Cybertruck is priced way above the rest of the Tesla franchise. So you're not going to see that many Cybertrucks delivered in 2023. We're expecting, some, maybe 100,000 in 2024. Once you get to 2025, that's when you're going to start seeing, the margin increase because of Cybertruck. So I'm not that concerned about the margin because that's already happened, right? But going forward, I need to see that it's stabilized and I need to see it start inching up as we get into 2025.
I think Cybertruck is going to make Tesla a lot of money. Did you guys see that Sandy Munro video this morning? It looked to me like the entire assembly line was automated aside from moving parts to general assembly with a forklift. And aside from the billions of dollars in profit that Cybertruck is going to generate for Tesla, it's going to do even more than that. It's going to be probably the advertising staple for Tesla over the next couple of years because you just can't ignore the vehicle when you see it on the road. And a lot of artists are going to be using it in music videos. But look, auto gross margins in the long run, I think it's pretty irrelevant to Tesla's overall story. I think selling cars to Tesla is like selling hamburgers to McDonald's because there's a larger story at play. For McDonald's, selling hamburgers was irrelevant because the bigger story was real estate. They wanted to accumulate as much real estate as possible. And I think the bigger story at Tesla is software. Get cars in people's hands, get robots in factories, get robots in homes, and then make those products incredibly useful. And that's how you become the biggest company in the world. And that's what Tesla is doing.
So Gary, one story that may not have moved the needle, but was I think, a harbinger of things to come was Tesla's charging deal with Ford that sort of upended that landscape and brought a bunch of traditional OEMs into the Tesla fold. I know that's not going to move the needle much from a financial point of view, but do you think that was a big story for them, a big kind of deal for them as we look forward to the EV transition?
Yeah, I don't think that's such a big deal because again, you're using the charging network, which is external to the car, right? I think a bigger story, which a lot of bulls are hanging on, I'm not in this camp, that FSD, that you're going to see a lot of legacy players decide to start paying Tesla for their FSD. That's the brains of the car, and so I don't see that happening. I think for an external, you charge it using a Tesla charger. I think that's smart business for GM or Ford or Volkswagen because the number one reason people don't buy an EV is because of this so-called range anxiety. Probably the number one thing is cost. They think that the cost is high, even though after the credit, it's really not that. But number two is that they're afraid they're going to run out of charge. And if GM or Ford can say, look, you could stop at one of these Tesla superchargers, get your charge filled up in half an hour, and there's 20,000 of these in the United States, that relieves that range anxiety. So I think it's good for the other OEMs. I think it's good for Tesla too, because once you're inside it, the supercharger, the long-term bet is the next EV they're going to buy is going to be a Tesla. I mean, they're gorgeous. They have the longest range. They're the best value for the money. And I think once people drive a Tesla versus say, a Ford Mach-E or, some GM EV, I think you're sold. You don't go back to the other brands. Tesla has very high brand retention. So the goal is to get people interested in Tesla, let them come to the superchargers. They're going to see the other Teslas, and chances are that'll be the next Tesla that they buy.
So do you guys see what I mean about Tesla having a margin of safety? I mean, guys like Gary Black here, they only want to focus on the things that are already making money. And even with that, he's already got a $300 price target on Tesla. So my point is that you can do well even if FSD and Optimus don't become a thing. But I think that they will become a thing. And here's why. Look, Tesla just fired their head of Dojo, replaced him with Peter Bannon. Why would they fire the head of Dojo if they were just planning to sit around and do nothing? No, they're serious about this. They want to make it work. It wasn't working, so they brought in somebody new. I mean, you have FSD, they're spending billions of dollars of compute. Why would they be doing that if they weren't serious? And now you have second generation Optimus, which is 10 kilograms lighter than the previous version, and it looks ready to be manufactured at scale. It has the most dexterous hands I've ever seen on a robot before. So Tesla posted a video of the second gen robot this week, and it already has 2.1 million views. A product of that buzz. If you're an analyst like Gary or anyone on Wall Street and you don't think that product is going to sell, then what are you doing? Look at the buzz. I mean, it's 10 kilograms lighter, so it's most likely that most of this body that we're seeing is plastic. It's going to be 100 times lighter than a car. So how much cheaper is that going to be then to produce? And nobody wants to talk about it. The media would rather talk about Elon's behavior. So let's just talk about that.
Though we have to talk about the Musk effect. How much does people's actual visceral reaction to Musk himself affect whether or not people are going to be buying Teslas in 2024 versus perhaps seeking other options?
Yeah, I mean, people love Musk or they hate him, and there's no in between. You're right. There is a brand effect, and I would argue, the brand has taken a hit during 2023. And look, I'm a bull. We own Tesla. It's our second biggest position, so we're very bullish about Tesla long term. But you have to, even as a bull, acknowledge that the brand has taken a hit this year because of Musk's, whatever we call them antics. When he berates the advertisers and uses, a curse word because you pause advertising. That's silly. Okay, it's just it doesn't help the Tesla brand. And whether we like it or not, the Tesla brand is it's part of Musk is part of the Tesla brand. He's one of the few CEOs where when people think about the brand, they also think about the CEO. So I think people either love Elon Musk or they hate him. And I think, as long as he can kind of stand clear of the politics and stand clear of some of the right-wing extremist views that, he seemingly has embraced over in Twitter, I think the brand will be fine. We haven't seen any brand impact yet, other than they did have to take pricing down this year. And, if you're a bull, you have to acknowledge that margins came down a lot, prices came down a lot. Margins came down to Tesla more than any other brand this year. So one has to, if you're being honest with yourself, acknowledge there must have been some brand impact or they wouldn't have had to take prices down as much as they did.
Well, I don't think Tesla's price cuts had to do with Musk's behavior at all. I think it just had to do with the fact that they were too expensive in this high interest rate environment. But look, I think that Tesla's products and the ecosystem that are evolving from Tesla's products, people buy a Tesla and they're like, wow, this is the greatest car ever. And then it's like, whoa, Tesla superchargers are the only place I can charge this car. And it's like, holy crap, if I get a Tesla Powerwall, it will pay itself off in 5 years and I can charge my car for free. And then it's like, holy smokes, I can replace my warehouse employees with Tesla Optimus. So you see how Tesla ecosystem is starting to become I'm not going to use that word again. Analogous. Thank you guys. It's starting to become analogous to Apple's ecosystem. It's becoming so strong that people are not going to want to boycott Tesla. So Elon can go on protecting free speech, protecting civilization, and doing the things that he sees are important. And if people get fussy about it along the way, Tesla's competitive advantage in these categories is so strong that I don't think people are going to boycott it. And here's why. When the advertising controversy was happening on X and Disney and Apple were leaving, and there was discussion of boycotting these companies in support of Elon, there was people saying, I don't know if I can boycott Apple. Their products are just so essential to me and they improve my quality of life so much. And And I think the same thing is going to happen with Tesla's products. But I think Elon's behavior is another reason that Tesla is as cheap as it is. Tesla is one of the companies with the lowest institutional ownership ratios among mega caps. And look, guys, I've been sick this week, so I apologize for the lack of videos. I actually struggled to get through this one. I have been coughing up a storm, but I don't want to gross you guys out. So I just want to say thank you for watching, and I hope you guys have a great day. And I will not get sick again. I'm going to stay on top of my health really hard. Thank you.